Okay, good morning guys. It is Saturday the 3rd of July 2010. I'm just going to do a weekly outlook here on the US dollar yen. See where we're going to go from here. So, not really been involved in this trade so far. Unfortunately, obviously this 92 level was obviously the level to go short, which is what I picked out a few weeks back. But my kind of scenario that I had to take, I wasn't here to trade, full time the signal. So I mean, we've seen a couple of failures at the level here. So I would have looked to get more involved on the demark front on this day here on the failure of this 92. But my idea here was to use the thrust level, which was produced and failed twice. So this is sort of textbook stuff here. Like I said in a few of the videos today, we did a training kind of session on Thursday or Wednesday, and so I was just kind of going over all my kind of stuff. So I mean, this was the ideal kind of scenario here. This is the quick removal scenario that I talked about, and then a quick retest. We had two retests to this level, and then you can see that's where the market kind of kicked off. And it was the reason it was such a good setup was because it was in a good area. We've broken the bat support, so we're bearish. We're still in the early stages of this overall bearish trend, and we're still well above the trend continuation point. So this was the area to get involved in here, the 92 level there. So anyway, so going forward, anyway, we've only just come through this trend continuation point. We've posted a 9 count buy setup, so I'm expecting to see a bit of a bounce here. I mean, I think once we get this thrust bar, we will see definitely a bit of a correction here. But because we're through the trend continuation point now, I'm definitely expecting to see this 84.16 level here. It could be that we just keep going and get right down to that 84.16 before we see any kind of bounce. But obviously, I'd prefer to see a bounce before we do get down to that 84, just so that I can catch a bit of this move that basically has gone along with my methods. So it would be nice to catch a bit of that. Just a shame that I wasn't here at the time for the main kind of the move of this kind of trade here. So yeah, so what I'll be looking for here is I'm looking at this 90.28. It's a psychological 90 level. It was tested and then removed, and it wasn't retested. So I still think this level will hold as quite a good resistance level on an initial test. I'm fairly sure there'll be plenty of sellers in there. Anybody going long would be using that 90 level as a target as well. So I would see us definitely falling off initially on that 90 to 90.28 level. So I'll look to sell that if we get up to there. Looking at the current situation here, we posted an inside day on Friday. Even on non-farm day, it wasn't just a great deal of action. This was the non-farm candle, and then we basically stayed inside that range for the rest of the day. So there wasn't really a great deal of action. What I'd like to see here is possibly a move lower tomorrow, and then a break up through this Friday's high, and finally see like a decent bounce up towards that 90 level for a bit of a retest, and then a move lower on the back of that. I mean, if we look at these weekly charts, we're going to remove that 88.31 level to the close, and 89.45 is the high, so we might not even see that that 90 level that I'm talking about, to be honest. Based on this weekly, we shouldn't really see that level. Because we've removed this 88.31 to the close, we shouldn't really go back above the high of last week, which is 89.45. If we do, then it kind of would dampen the bearish view temporarily anyway. But definitely looking at the monthly as well, we're making good progress on the monthly. We posted an inside month here, in fact. The low was 88.27. The low of the previous month was 88.27, so we actually don't think that'll count as an inside month. I think we've got to be actually, at least a pip above the low there. So yeah, but we're definitely looking bearish here, looking like we're going to be making this next leg down to the 84 level, which would take us, let's see, down around here, which would only just be a lower low, so we could even extend further than that. I mean, on this daily chart, I think 77 was the second target, yeah. But I expect to see some kind of bounces happen here, and while we're still around this trend continuation point, even marking off any bullish thrusts, once they're removed to the close, I would still fancy taking them while we're in this range here, this trend continuation point, and still below the bat resistance there. I mean, if we come all the way down around here, first target, and have a bounce, that I'll not get involved in that. I'll just leave it until we break the upper bat resistance whenever that happens. But yeah, so going forward here, hoping we might actually see a quick move down and then a burst up higher, possibly to that 90.28. Although the weekly isn't looking like we're going to get to that level, and yeah, I mean, I don't know if I'd want to sell that 88.31 level either. I mean, it is a weekly level. It's been tested sort of three times. 88.12, 88.27, so 88.31. So I mean, I'd expect to see some, definitely see some resistance around there. Let's see what's the high on Friday, 88.55. It could well be that if we actually move higher on Monday, it could be a bull trap in there. It could be enticing people to buy the breakout, and then there'll be a lot of sellers in there. But the way the overall sort of shape of this market at the moment, I wouldn't really fancy selling that 88.31 level on the weekly chart. Obviously, the risk is still up to that 89.55. It could easily fail here, but to be honest, I'd rather, if that scenario was up around here, like I say a lot of the time, then I would look at it more. But not where we are. I think I would leave that whole scenario there. But yeah, so hopefully we'll see a bounce here and possibly get involved at some point. Okay, cheers.